Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for March 17th, 2024. And I have a really big video for you today. We've got so much content that I got to get through, so I'm going to try to do it as quickly as possible for your benefit and my benefit as well. Just remember this video, especially if you watch it after about a hour or so after it's been released, it should have chapters in it, so you can just fast forward to the point where you want to get. We're obviously going to be talking about not every all the central banks that are meeting this week, but there's so many other topics. Some of you just want to skip ahead to what the best trade setups were from last week and a review of them, and the best trade setups for this week. You can go all the way to the very end if you want to just get there as well, but I'm going to fill you into everything that's happening this week. So let's get started. First and foremost, actually, even before I get started on that, you'll notice that on our website it says coming soon. Be on the face show March 20th. We're actually going to postpone that for a week, maybe 2 weeks. There's a couple of technical issues that we came across, and it's all about with our developers and your experience. Everything works fine. It's just your experience making it just a little bit better. So stand by. That date is going to change. It won't be on March 20th. But if you listen to the face show, don't worry. It'll be coming up in the next week and a half or so. And just be ready for our new project that we're launching here at Forex Analytics. We're super excited about it, but we want to make sure it is right for you as far as your experience. And so we just need to make a couple of tweaks. I'm sure you can all appreciate that. All right, moving along. What's happening this week? Well, it's a central bank just extravaganza, bonanza, whatever you want to call it. It's every central bank is, not every, but most central banks are meeting this week. We have the Bank of England, the RBA, the Fed, the BOJ. Those are the headliners, the Fed and the BOJ. We also have the Norges Central Banks, Swiss National Bank, Banxico, a lot of emerging market central banks as well. And if there's one thing that can move the markets, which we're all desperately praying for some movement in the markets, is when central banks get divergences between monetary policy and expectations. That's what creates volatility. And this week, we are chock full of those opportunities. And I'm going to go through them all with you. Also, there's a big conference this week with NVIDIA. NVIDIA has their chip conference, and it starts on Monday and it goes throughout the course of most of the week, and that could really move the semiconductor index. And I kind of want to talk about that just real quick because if you look at the SOX, and I almost did the dollar sign, but it's not it. If you look at the semiconductor index, it's starting to break down in a head and shoulder pattern. So if you haven't seen it, I'll just highlight it for you real quick. The problem with this head and shoulder pattern, you'll see it here. There's your shoulder, head, and then extension of the head and shoulder pattern. The problem with this pattern as a whole is it has an opportunity to move down to the 38% retracement to complete that pattern. So obviously the market is priced in a lot of great news for semiconductor index, especially those that cater towards AI. How do you say it other than it's kind of baked in? So the risks are for a disappointment, and everybody goes, yeah, I already knew that. I already knew that was coming out. I already knew that technology was happening. I already had those expectations. Then if that's the case, and we start to see some of these semiconductor stocks come down, specifically like SMCI, NVIDIA, Marvell, AMD, you start seeing those stocks move lower. It could really have an negative impact, because the risks are tilted to the downside because everything might be priced in. If those start to fall, that could really have a bigger impact on the broader markets, which we will talk about in this video. So make sure you go fast forward if you want to, or just stick around and listen to the whole thing. I got so much information for you. All right. One other thing that we have to talk about is just before I get into what's happening this next week, kind of the reaction to the inflation data this week. The thing about inflation is what we saw is the CPI data came in, and I happened to be out of town. I was in Mexico earlier this week. a family vacation. And what happened this week is, the CPI reaction, everybody was like, eh. But then you got the PPI that came in later on in the week. And that really just kind of cemented the idea that inflation is going to remain kind of sticky. And that's what turned yields higher. You can see it in this chart. That's what turned yields higher throughout the course of the week, especially the second half of the week after completing that, that double top extension. Once we completed that, we got a big reversal. That reversal is setting the stage for higher yields. And with higher yields, we could get a stronger dollar, especially going into this week where the Fed is one of the headliners this week. So lots to chew on. All right. Hey guys, if you haven't tried out Forex Analytics, make sure you do so. It's $1 for 10 days. Not only are you involved in the Forex Analytics community, you get this wonderful platform with live charting, harmonic analysis, Elliott wave analysis, basic technical analysis for 30 different products. And anything from Bitcoin to cross rates to silver, gold, what's happening in the markets. You get all of that live streaming news, risk management calculators, but you get to be involved in one of the most active trading communities on the face of the planet inside the Forex Analytics community. Because not only are there conversations and multiple chat rooms that you can see here, but you have threads on top of conversations that you can be involved in. So it's not just what you see here, it is also what is involved all inside of it. So make sure you try out Forex Analytics. Like I said, $1 for 10 days. Also, before I continue on, if you like these videos and you think they're very beneficial to you, every week as we prepare you throughout the course of the week for the trading week, make sure you give my team a thumbs up. Subscribe to the channel below. A lot of people believe that subscribing actually costs something when you're subscribing to a YouTube channel. No, that you can subscribe to those for free. Subscribing to our channel is free. Hitting the bell icon and getting notified on your desktop or on your phone when a new video is released, like the week ahead video, it's free to do as well. And it's also free to give a thumbs up. All right, let's move along. So starting off with this week. I meant to also, before I disappear, just pull myself off the video like that. One of the other things I wanted to mention too is that, we may not have every central bank meeting this week. There's also more inflation data because we were talking about inflation, how it's become sticky. Well, we also have Canadian inflation, UK inflation as well. So a lot of inflation data coming out this week, even with all the other central banks meeting. All right. So let's start off with Monday. Okay. So on Monday, early in the morning, and let me get rid of myself here. Early in the morning, we're going to have Norway's GDP. Now, the other thing that's happening with the US dollar Norwegian krone, obviously, is we have the Norges Central Bank, which we have to pay attention to because that's going to be on Thursday. But remember last week, and this is drawn from last week, I drew the green arrow here. Go back and watch. You guys know on these week ahead videos, I have a specific set of charts that I draw on the week ahead video so we can come back the next week and you can see what I drew and see what happened, right? Last week, we talked about the US dollar Norwegian krone finding a bottom and rallying. Well, it did. So let me get rid of that. You can see we rallied sharply. I was running a long US dollar Norwegian krone throughout the course of the week as well, at least part of the week, and I exited it. And so the thing is, it looks like there might be some more in here, especially following Norway's inflation data this last week. There's a risk, that they're going to tilt towards potentially cutting rates. And that could really weaken the US dollar Norwegian krone, which hasn't really even responded with stronger crude prices, which is also crazy. So Norway's GDP, watch this breakout above the 200 DMA, above 17, and I'm going to draw some more above 1072. You're going to get a full-on squeeze in the US dollar Norwegian krone this week. if we start breaching some of these levels. Remember, it's not just Norway's GDP Monday. You got the Norges Central Bank on Thursday. Monday night, I say Monday night, but it's actually Tuesday morning. It's the marquee events that are coming out. First and foremost, we're going to have the RBA rate decision. And you got to pay attention to the RBA because last week we had, or recently, we've had inflation come down. And there's a couple things that we really need to pay attention to with the RBA rate decision. And, they had some commentary in the last, in some of their, in the last RBA statement. And I'm going to read one thing to you. Okay. Let me find my notes here. It'll be some time yet before inflation is sustainably in the target range. And they also said a further increase in interest rates cannot be ruled out. Now, that commentary may be under fire with this RBA rate decision. So what moves currency markets are not only interest rates going up and down, but it's expectations. Remember coming into 2024, most economists were like, look, the RBA is the most hawkish central bank out there. We just saw inflation come through, and and because China's economy hasn't really done much at all, and China is a big recipient of what happens in China, the risks are starting to tilt that they might lean towards a rate cut quicker than the market thought. And so you got to watch this, the Aussie dollar, because you'll notice technically all we did is we hit a 50% retracement. So when you hit a 50% retracement, the risks now become that we complete or at least fulfill an ABCD, which would be an equal leg move that looks something like this. So at this stage, you got to start asking yourself, where is the breakdown point in the Aussie dollar? And my opinion is it's not very far away. So if you just do something like this, let me just go ahead and clone that. What you're looking at potentially is the risk of the Aussie dollar actually turning lower, and a break below like the 65-cent level, in my opinion, is going to open up some downside. Now, I've highlighted this over the course of the last several months, and I'm not shy about saying this at all. The Aussie dollar has not responded well in a strong risk environment. When the S&P is going higher, commodity currencies like the Aussie should be ripping. When copper is ripping, the Aussie should be ripping. And copper is ripping. Have you guys seen copper recently? Let me just pull it up really quick. When copper is ripping, the Aussie should be ripping, and it's not. So where the risks lie right now? Downside in the Aussie. Break below 65 cents. That's going to be a pretty bearish event for the Aussie dollar. So keep that one in your mind, close to the vest. Now, what else? The big marquee event, though, is going to be the BOJ. So let's talk about the dollar yen. And I have to say, the dollar yen has bounced back off of the 200 DMA. I thought it was going to break down below this support. I still think that this is really important because we highlighted it, how important it was being this, key level here, here, here. So you can obviously see that the dollar yen, and let me draw some things. Ooh, I didn't want to do that. I'm going to grab this line here. Okay, and drop it like this so you can see it. And let's, you know what? Forget that. We're just going to highlight how important these levels are that we're at right now. One of the things about the Bank of Japan this week is, the Bank of Japan is expected to really, there's a really high probability they're going to end negative interest rate policy. They're going to start on the path of raising rates slowly. They've been very, very vocal about being slow to adjusting policy. I mean, this is the first time they're raising rates in how many, like literally 15 years or whatever the number is. It's been obviously, longer than majority of you listening into this video have ever been in the markets. So just put it that way. All you've known is, Japan and negative interest rate policy. Most of you that are listening in right now. All right. With that being said, the one thing I have to point out here that's obvious, but let's just make sure that we're clear, is that you look at the difference between these G8 central banks or G10 or it doesn't really even matter. Look at where Japan's at and look where every other central bank is at. The problem is that even if they start raising rates, the differential, the difference between where US rates are, New Zealand rates are, even Eurozone rates are, and Japan is quite substantial. So that's why that even as the trajectory may be for Japan to start tightening rates, there's still a big disparity between where every central bank is and where Japan is. That's why that the downside might be fairly limited, or I should rephrase that. The upside in yen, even if it does strengthen, that's not what I wanted to do. I wanted to grab this. The upside in yen might be fairly limited on this move. So I would expect that if we do see yen strengthening over time, it's going to be more of a stair-stepping type of move. And for those of you that are sitting here going, well, the BOJ is moving, so we're going to do that immediately. I wouldn't have those high expectations. There's a lot that really has to take place in Japan in order for the BOJ to continue to move higher and other central banks start cutting rates. There's a lot of things that have to happen. But one of the major things that happened this last week was the wage negotiations. And when wages go higher, and we already have stronger and higher energy costs in Japan because they have to import everything anyway, and you got higher commodity costs and kind of very steady inflation, if not ticking higher inflation globally. The risk that you get into Japan is that with these wage negotiations going up and inflation staying elevated globally, prices and energy staying elevated globally, is the BOJ may have to raise rates faster than they expect. And that is when you start to see an accelerated move in the yen, but I don't expect that this week. I do expect a reaction, and I think it's going to be one of the bigger reactions, but if the BOJ for some reason does not move, there is a risk, guys and gals, there is a risk that the US dollar Japanese yen can be trading way up at 152 before turning lower again. That is a risk. So if they just wait one more month before making a move, that is a risk, and you have to be thinking about the reaction function of what can happen here with the yen. I'm going to just say this, going into the BOJ and the FOMC this week, I'm going to say tread lightly. Be careful. Don't have huge positions going into these moves. All right, let's continue on. I got so much more to cover, so we're going to continue on. We talked about the RBA. We talked about the BOJ. Tuesday, we have Canadian CPI. So Canada is one of those currencies I think everybody should be watching, just because I just had a conversation with Deerpoint Macro just yesterday, actually, and that video will be out this weekend. He lives in Canada, and I was talking to Adam Button, who is the chief strategist over at Forex Live just a couple of weeks ago. You guys and gals may have seen that video. These Canadians really are very dovish on the Canadian economy. And, with Canada's CPI coming out on Tuesday, if that comes in below expectations, I think the risks are that the US dollar Canadian actually blasts higher this week. That, I think, is one of those, potential moves that's flying underneath the radar. So a break of 136.30 of this 618 retracement would be pretty darn bullish for the pair. So watch the Canadian. That would be a pair that could slide right below the radar that I think you should keep on the radar going into this week. All right, continuing on. Tuesday night or Wednesday morning in China, we have the 1 and 5 year rates. Wednesday morning, early morning, if you are in South Africa or you're around South Africa or you're watching the Rand, we have South Africa's CPI coming out. Now, I'm going to come back to this chart a little bit later, but we were looking for an eventual breakout of this triangle. I don't think that my mind has changed. All right. I still believe that this dollar South African rand is eventually going to be breaking higher. And there's more I'm going to have to say about this, the dollar rand. But I will say this, as we close back above the 200 DMA, if inflation comes in a little on the light side, then the risk is that we start to break higher. Now, the flip side of that is, if we start breaking below 1845 or 1850 right here, then you're going to start to see a breakdown in, the dollar rand. So that's something to keep in mind as well as we head into Wednesday morning. Also, on Wednesday morning, we have UK GDP. So we talked about the sterling and how it could break out above resistance. It did. The triangle, we broke the triangle. Now what do we do here? Well, let's delete all this stuff. And actually, let me put that back on. And let's acknowledge the fact that we got a little bit of a false breakout. Okay. The other thing that we might be looking at right now is an ascending channel. So with that being said, and we do have the Bank of England in play this week because we have the Bank of England rate decision as well, which is on. Let me make sure I've got this right. I don't want to, because I did, for some reason, I did not put this down. It's on Thursday. Gosh, I almost forgot that. So we'll come back to that. But we have the BOE on Thursday. The thing is, sterling actually had this false breakout here. Now let's get rid of this. Okay. So I think the risks are that we could come right back down to channel support, which would be right. I didn't mean to do that, but let's, I screwed that one up. Let me put that back on. Here we go. All right. So the risk might be that we slip back towards this channel support here. And I think the 200 DMA is going to offer a lot of great support down in this level. So with that being said, let's move that back down here. We might actually end up getting a move that looks something like this week. All right. So watch that with the UK GDP, which happens on Wednesday. Remember, the Bank of England rate decision is on Thursday. Now on Wednesday, though, staying along with Wednesday, one of the other, the other marquee event of the week is going to be the Fed. Obviously, we have the FOMC that's happening on Wednesday. So let's turn our attention over to the dollar index really quick. And with the Dixie, I think a lot of people are leaning into, or have been leaning into, being short the dollar, thinking the dollar is going to break down. And you'll notice that the dollar is in this descending channel. The risk is if we get back above the 200 DMA, because if we get back above the 200 DMA right here, that means we're back above the 50% retracement. That means we've got probably a pretty strong rally coming into view. Now, the dollar index, just for those of you that are new to the week ahead video, it's one of the only charts that I actually draw on throughout the course of the week. So on the week ahead video, you'll see these charts change because I've used this exact same chart throughout the weekly phase shows, morning edge, and every other show that I'm on. So if you all don't know how to get to those shows, all you have to do is go to our homepage at Forex Analytics, and then you'll see where it says, this is the face show right here, okay, right here. And then you can also get to our shows right where it says webinars. You can get to the Flow show, which is a free show during European hours. It's got Ryan Littlestone and K-Man. Those two typically are the two on there. We also have the face show. These are both free shows that are available to you all throughout the course of the week, because this way you get an opportunity to hear not only my analysis, but the rest of the team's analysis throughout the course of the week, so we can keep you abreast of everything that's happening. And as you know, this week it's going to be a big one. All right, continuing on. So the dollar index and the Fed, the risks are at this point is that we have to talk about the dots. I was just meeting with Jim Welsh of Macro Tides this week on Friday, and then I was reading other analysis this morning. It's Saturday morning right now. I was reading more analysis from other big banks, really referencing the dot plot. And all it takes is just a little bit of movement with the dot plots, and everybody goes, "Wait a second. Maybe we're not going to get 3 cuts in 2024. Maybe we're only going to get 2." And Jim Welsh of Macro Tides that I met with yesterday, he doesn't think that the market is prepared for that. I would venture to guess that is probably a great assessment. The reason why is because if you remember going into this year, into beginning of 2024, the market was thinking we're going to get 5 or 6 rate cuts. If the market goes, okay, we're not going to get 5 or 6, but we're maybe going to get 3, maybe only 2, and maybe even only 1. If you get that starting to seep into the markets, the problem with the stock market is at such lofty levels that are inflated at these levels because they think that the Fed's going to have all this ammunition to cut. If they don't, stocks may come under pressure, and the dollar has held up very well based on all of this. So with that being said, if the market continues to believe that the chances of a rate cut are weakening and weakening as weeks go by and the U.S. economy continues to be pretty steady and strong, the risk is the dollar index gets back above the 200 DMA and we rally quite substantially. So watch the break point. We're at it. It's the 50 DMA right here in orange. You can see it right here. Let me get rid of myself. You can see the 50 DMA right here around the 103.60 level. And then above 103.70, we're above the 200 DMA. Probably the next step will be we're trading above 106. Now, why is 106 even possible? Well, let me explain it to you. For those of you that are not looking at or not thinking about harmonic patterns, you probably should be. Because if you're thinking about harmonic patterns and how they may develop once they complete, well, in this case, the dollar index could be setting up a Gartley, quite possibly even a butterfly pattern. So if you think about that, what that looks like, it looks something like this. So the risks are if we get above the 200 DMA, that we start making our way back to 106 to 106.50. Or maybe even 106.60 if we get lucky. And if it turns into a butterfly pattern, heaven forbid, that means that we are looking at something at 109 in the months ahead. So if you happen to be short the dollar, I want you to be thinking about this. All right? About the possibilities. Doesn't mean it's going to happen, but above the 200 DMA, I think the risks are now increased. All right, let's continue on. Let me remove that. All right, so the Fed, focus on the dot pots. The dot pots. If you think that's funny, give me a thumbs up down below. The dot pots. Dot pots. All right, next up, New Zealand GDP. So let's talk about the Kiwi and let's talk about the New Zealand, which the RBNZ happens to be out of the picture this week. But that doesn't mean the Kiwi's out of the picture because you can see we're at the 200 DMA. What happens if we start breaking 60.40? That's the level that we've been looking at so closely every single day on the Morning Edge show. If you don't know, if you're not on the Morning Edge show, well, that's because you're not a Forex Analytics subscriber. It's an exclusive show where we go through all of these instruments. We talk about the key levels every single day. And when they're highlighted with an asterisk, 60-40, I say every single trading day, as I should reference that. Trading day, not Saturdays and Sundays. If we break 60-40, that means we are going to have a hell of a time with the Kiwi dollar. Now, why is that a risk? Why is even that a risk? Well, if you guys have not looked at the Aussie Kiwi recently, let me just pull up that currency pair for you. The Aussie Kiwi is right at the 200 DMA after giving us a false breakdown of this long-term trend line, but more importantly, holding this support You guys would know this if you, again, I can do it right here too. If you follow the Aussie Kiwi and what our analysis has been throughout the course of the week, let me get to it. Okay. We were looking for a breakout higher once we broke this descending trend line. And just to give you a little bit more flavor, if you get above the 200 DMA, next thing you know is you have the Aussie Kiwi that is going the absolute opposite direction. Now, that would mean that the New Zealand is underperforming, which means that the New Zealand dollar probably broke below 60.40. And if I've lost you at this point, that's probably a great reason for you to be subscribing to Forex Analytics. Remember, it's only $1 for 10 days to listen to all of our analysis throughout the course of the week. All right, continuing on. Wednesday night, we have Australian jobs data, which could definitely move the Aussie dollar, following the RBA, especially if we're trading below 65 cents. Thursday, we have the Norges Central Bank. We already discussed the Norges Central Bank and the risks that are surrounding the US dollar and Norwegian krona. But also throughout Thursday, we have the Eurozone, UK, and US PMIs. And this is where we might continue to see US exceptionalism. Now, one of the things about the euro, and I'll come back and reference the euro since that was one of our setups from last week. The one thing that I want to tell you about the euro is I think this is a good currency pair to be focusing on if you're going to trade dollars this week. The reason why is the European Central Bank is not in focus this week. It's every other central bank, basically. So if you're trading, because of the FOMC, you're trading because you think the Fed's doing this, that, and the other thing. The euro, I think, will be a great currency pair to express, how you're trading. All right. Just keep in mind that we have Eurozone, UK, and US PMIs all on Thursday, which could definitely move the market. Also, what's happening on, and I'm going to come back to the euro and I'm going to talk about how important that 110 level was and how important it continues to be. But one of the other things that's happening, or some of the other things that's happening on Thursday, is we have U.S. unemployment claims, Philly Fed, and existing home sales. Also, what's happening on Thursday is going to be Banxico. Now, I was wrong, so let me just make sure you all know this. I was wrong with the dollar MEX. I thought the dollar MEX was going to stabilize and bounce, a couple of weeks ago, and I got stopped out of my longs. The dollar Mexican peso eventually succumbed to the weight of the stock market being so strong, and Mexican peso just started to rally. Now, what's really interesting though is the dollar Mexican peso found support at really critical support here. Now, the risk is with Banxico on Thursday, if we get back above 1680. So this is a number that, maybe if you're jotting down with your pen, you're like, oh, wait a second. Blake said 1680. If we get above 1680 and we start to see a rally above 1680, that means we're technically going to start squeezing because, everybody's going to be thinking double bottom. But why is that even a risk? That's because Banxico could really cut rates, and they can lean dovishly. Now, I know you want to see big rate differentials. Go take a look at BOJ versus the Banxico rates. That's why the Mexican peso Japanese yen has been so strong. But again, if Banxico is moving in one direction and they're like, look, we're going to start cutting rates and we're going to start cutting rates over time, you could really see the Mexican peso come under pressure. Now, I also believe because Banxico changed its operations post-COVID, the post-COVID, massive peso buying that they started back in 2020, and they announced the completion of that late last year. I think the wheels are in motion, or the gears are in place to really see a bigger reversal in the dollar Mexican peso over time. So what level should you be looking at? Yeah, that's right. You know exactly what level that is. 1680. All right, Friday morning. A couple other things happening. We have UK and Canadian retail sales. I have on my calendar, and I could only find it on a couple of calendars. Powell's speaking, and he's supposed to be giving some opening remarks at a Fed listens event in Washington, D.C. Go back and check your calendars as we get closer to Friday, just in case Powell is speaking there. I couldn't find specifics on it, so maybe you could. And if you find those specifics, jump out down in the comments below and let us all know what you found. All right, let's go and talk about just a couple other markets that are really, really on the move. One of the other big risks this week. Last week, remember, we said, is gold's rally over so soon? Do you remember that? Yeah, we hit the 127% extension. You know, the thing about gold is it continues to hold up pretty well. So I'm just going to say this. As long as gold is above 2080, we shouldn't be bearish. But also another risk is if we drop below 2150. If we drop below 2150, the risks start to build that we test 2080. And if we break below 2080, then it becomes quite bearish. So those are two things that we need to be watching in the gold market in the days ahead. All right. Next, let's talk about what's happening in the bond market, because in bonds, I know I referenced it a little bit earlier, but the one thing I have to go back and say, let me find the 10-year here, is the bond market actually turned around pretty aggressively and we moved lower. Yields started going up. What happens if we actually start to see the 10-year break down? And I think that is one of those risks that haven't been so much highlighted this week. That haven't been highlighted this week by most analysts. But look, if we start trading below here, I think most people believe that the bond market should be going up. So if the bond market, and you're talking 10 years, and they start breaking down and you start seeing yields rally, I think you got to respect it. And so just keep an eye on that. One of the other big things that happened this last week is also the S&P. And I want to talk about the S&P a little bit here because we have that big semiconductor index, but really we should be focusing more on the Russell 2000. But check out this chart, and I think this is important because, okay, let me delete some stuff. Do you mind if I delete a few things? Let's delete this. We don't need it. Let's delete this. We don't need it. Okay. We're going to keep that. Let's delete this. Oh, no, not that. Okay. This is for our own, records. We want to delete that. Let's delete that. That's not irrelevant. Let's delete that. That's irrelevant. Irrelevant. Not relevant. Not relevant. Not relevant. Not relevant. Not relevant. Okay. Even this stuff is not relevant, but that's okay. Oh, well, we can delete it anyway. So who cares, right? We don't need to reference it right now. What's relevant is what you see on the screen. Now, why is that relevant? Well, because I think we're following an ascending channel that's pretty well. The market's behaving really well inside of this ascending channel. You can see it. But take a look at my red line here. This is the ascending wedge part. Now, throughout the course of the week, and that's the thing about when you're looking at technical analysis, is it's not perfect. It's a bit of an art form, right? But more importantly is we make adjustments throughout the course of the week on like what levels have held, what levels have broken. And in this case, I think we have an ascending wedge that is broken. Now, what's probably most important is channel support, which comes into view around 50-50. Now, why is 50-50 a big deal? Because if you've listened to the trade-off show that I did with Chris Weston earlier this week, or you've listened to any of our shows throughout the course of the week, I said the bull-bear line in the sand is 2050. Well, now you can see it's also channel support. So you have the S&P that's getting real close to this support, and we have this ascending wedge that's breaking down. So if we break below this ascending channel support and below the 50-50 level, I think that's where the selling really starts. Now, what do I think, and why do I think that is a risk? I'm going to tell you exactly why. You're looking at the daily chart with me, right? Focus on the lower panel. What's happening on the lower panel? We have a breakdown in relative strength. So I believe this is actually showing us that the market is going to be breaking down sooner rather than later. All right. So I'm glad you all have that understanding. Now, one of the markets you should probably be focused more on is the Russell 2000. The rejection of this big resistance, I know we talked about it already, but also coming out of an ascending wedge. Thank you, Nick Grasshopper, and our one of our Forex analytics, analysts. He pointed out the ascending wedge, the breakdown. And Nick, hi, how are you? I'm sure he's listening to this video right now. Then a move back below some of these levels is going to really spell trouble for the Russell 2000. And remember, there's a lot of semiconductors in that Russell 2000, and they're also in the SOX. And there happens to be a semiconductor big conference, NVIDIA conference this week. So keep an eye on the Russell 2000. Last but not least, before I get into the best setups and reviewing last week's setups, is Bitcoin. And matter of fact, you know what? Let's hold our horses there, because Bitcoin's going to show up on my best setups for this week. So I'm going to come back to Bitcoin in just a few minutes. Let's talk about last week's setups. So last week's setups. Short, number one, I remember I gave you 4. I gave you 3 plus a bonus. Do you guys remember that? Okay, so last week I said, while the euro is below 110.07 on a closing basis, which had been right here, we have to remain on the short side. Well, I give that one a good to go. We just, and I was gone for the first part of the week, but you can see in the daily chart, we have dropped, and, and I'm going to just say this, as long as we remain below 110, I think you should still remain on the short side of the euro. I think that the euro, US dollar is at risk of dropping back below 105, if you want my, opinion that I wasn't going to voice today, but I decided to do it anyway because you guys are special. And so there we go. All right, next, short Aussie yen below the 50 DMA. All right, so the Aussie yen, it dropped below the 50 DMA. It broke, but it turned around and squeezed by the end of the week. So I'm going to call that one. It's not that probably took a loss. And by the way, I didn't trade it because I was actually in Mexico, so I didn't even trade it. So I'm going to say that one, you have to say it did not work out. It dropped below the 50 DMA. We thought I thought it was going to be really big support here, which you can see it triggered a bunch of stops, and then a day later we just turned around. So do I think that the Aussie yen should still be on your radar? Absolutely, I do, but it's not for this week. Next, long Euro Swiss while above the 200 DMA. Well, let's take a look at the Euro Swiss, and let's take a look at where the 200 DMA is at. Well, we dropped even closer to the 200 DMA on Monday, Tuesday, and it said, hey, get long while we're above the 200 DMA. So yeah, I call that one a win, and I'm still long Euro Swiss. Keep in mind, shoot, I forgot to mention, Swiss National Bank is also meeting this week. And if you already jumped in the comments and mentioned it, don't worry about it. Swiss National Bank, they are expected to actually cut rates this week. Expectations are getting kind of high. So all Swiss pairs are going to be in focus this week. Bonus of last week. Long Euro Canadian. I think it's just stayed stationary all week. It has. This is... what is that? Friday, Monday, all throughout the course of the week. I'm going to say this. Keep it on the radar, because I think this one still breaks out. All right, let's talk about the best setups this week. So first and foremost, Bitcoin. And now remember, this is actually, that's Oanda's feed. So let's go over to Binance. That's the data feed right now. We are trading below 70,000. That, in my opinion, is a long-term false breakout. So while we're below 70,000, you can actually even say 71,000, but daily closes below 70,000, I think, are now at risk of a move back down below 60,000. So I think you get short Bitcoin. Just keep your risk tight. If you're trading something like Bitcoin, you just want to make sure that if it breaks new highs, you get out. It's okay to be wrong. It's just not okay to stay wrong. All right, next, because the BOJ is happening this week, New Zealand yen. below 90, that means we have a false breakout of the wedge, which is called in Dale Pinkert's terminology, we call it a throwover. So a break below 90 is bearish. Following the Bank of Japan this week, if the Kiwi yen, and you guys know I'm already bearish the Kiwi. I told you how bearish I was. I explained to you the Aussie Kiwi. I explained to you, you have to go back and listen if you just fast forward to this. I explained to you the Aussie Kiwi. I explained to you New Zealand. I explained to you GDP. I explained to you 60-40 on the New Zealand dollar. And guess what? New Zealand yen is definitely on my radar, and I'm not short just yet. But below 90, I want to be on the short side. Last but not least, third setup this week. And I talked about it a little bit earlier. I think you look at the U.S. dollar, South African rand, maintaining channel support as long as we are above 1850. By the way, I am long. Then you stay long, and I'm looking for an eventual move higher, breaking above that triangle resistance. So that's going to be my last setup. And I want to say, guys, gals, if you haven't tried out Forex Analytics, make sure you do so. It's only $1 for 10 days. Make sure you download the mobile app, and make sure you get involved in the chat room. You can see right over here in the upper right-hand corner. That's how you actually get to the chat room. And you can chat with myself and the rest of the teammates and all the Forex Analytics community all throughout the course of the week. It's a pretty safe community. You know, if anybody tries to sell you anything, we boot them. They're gone for life. You talk about politics, you talk about religion, we're going to shut that down. But, you know, if you want to talk about the markets and you want to be cordial to one another and respectful and polite and exchange ideas, then that's the place where we're at. So check out Forex Analytics. Guys, gals, I want to thank you so much for spending your very valuable weekend time with me. My name is Blake. I'll see you on Monday on the Face Show. You guys and gals have a great remainder of the rest of your weekend. Thank you very much. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.